Hi, everyone. This is Jason Barrack of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. I'm glad to have him back on. It's Marc Faber of the Gloom, Boom, Doom Report. He's managed money, and he's been around markets, and he's made money in markets for a very long time. Thank you for joining us, Marc.
It's my pleasure. Thank you very much.
Now, Marc, in terms of the volatility we've had in these different markets, we just seem to not have had volatility for a while. Do you think that's because of global central bank intervention and all the liquidity and quantitative easing programs that not just the Federal Reserve but these other central banks have done?
I'm not sure that the low volatility is really due to central banks, but very clearly because of central bank interventions. In other words, because of money printing, markets have been going up. But usually, following a period of low volatility, volatility does come back. It's just a question of time. When is it going to come back? I think it will come back in the second half of this year, in other words, between now and the end of the year, or between now and March of next year. I don't think this low volatility will stay there forever.
Yeah, I don't know if you saw this, Marc, but Zero Hedge had a story from Mark Hunsader of Nanex, and Mark Hunsader was showing a lot of proof through the charts based on the weird trading times and high-frequency trading algorithms, because that's what Eric Hunsader tracks of Nanex, that there's a clear, humongous footprint from a lot of central banks that they are trading futures in at least the stock market.
Yes, I think the CME recently announced that central banks enjoy special rates. In other words, they are trading futures. But to what extent this leads to permanently low volatility, I'm not so sure. I think the low volatility will stay in place for some time and then come back massively when market forces become more powerful than, say, central banks. As an example, today, bonds are suddenly out of the blue very weak. And I'm not entirely sure why. People say because of the strong dollar or because of economic growth and so forth, but they are very weak. So there will be again volatility. It's just a question of when will it happen. Moreover, if you look at the movement of the euro vis-a-vis the US dollar over the last couple of years, there has been a lot of volatility. If you look at bond prices over the last couple of years, there has been a lot of volatility. So it's not that there is no volatility at all.
Now, in terms of the long-term ramifications the U.S. and other developed world countries like Japan and Europe are facing because central banks have decided to keep interest rates suppressed below free market levels, what do you think in the long term is the long-term ramifications of keeping interest rates suppressed so much?
Well, whenever you keep interest rates artificially low, like between 2004 and 2007, you create a misallocation of capital. At that time, it went into the housing market, and we know what the implications were of that, what then followed, a massive crisis. And this time around, we don't know yet for sure, but something will eventually surface where people will say, how could we buy this on the assumption of artificially low interest rates? I mean, my sense is that the credit markets, the lower quality bonds, will first sell off, and then the stock market.
Yeah, it definitely seems that financial repression, the goal has been, the wealth effect for many different reasons. The Keynesians obviously believe the wealth effect will help the middle class and that it'll create jobs through consumer spending, but I don't believe that the wealth effect has really helped anyone except for, the top 1%, the people who control a lot of assets. It doesn't seem...
Top 1%, it helped the top, say, 0.01%, because the top 1% has to cope with higher taxes and have to cope with higher costs of living, because it's become very expensive to be rich, because you have to stay in good hotels and live in nice neighborhoods, and that's precisely where the symptoms of inflation have occurred. In other words, not all property prices are at a historical high, but Hampton property prices and Madison Avenue and desirable locations on Park and on Fifth Avenue are very expensive. So the lifestyle of the wealthy people has become very expensive.
Yeah, that's a good point, Mark. And then you have also the prices of rare art and jewelry and rare collectibles and antiques. Those things have gone up a lot as well.
But I want to talk about one consequence of this asset inflation, and this is the following. Recently, and I've started to write this about 5 years ago, about the rising income and wealth inequality. Let's say you inherited some money 20 years ago or 30 years ago that consisted of some properties, not a lot, but some properties, and also an equity portfolio. And the equity portfolio was then invested in the S&P with dividend reinvestment programs. So it's not your fault that these asset prices have gone up dramatically. You did not take advantage of the masses, of the people. But now the Keynesian crowd and the Keynesian clowns who believe in interventions, they will blame the rich for the misery of the poor. Of course, the ordinary people say, yes, it's all the mistake of these rich guys that our real incomes are going down, that we're not progressing. They took money away from us, when in fact the rich people didn't do anything evil. The evil was done by the money printers at central banks, who are the Neo-Keynesians, and they are supported by people like Paul Krugman and the lot, that encourage them to continuously intervene with fiscal and monetary measures into the economic scene.
Yeah, I completely agree, Mark. And from going through the general theory, I read Henry Hazlitt's analysis of the general theory that goes line by line through the Austrian School of Perspective. It's called Failure of the New Economics. I'm sure you're familiar with Hunter Lewis's analysis of Keynes's general theory. It just seems like Keynes was mostly a fascist. He was a flip-flopper. He didn't, maybe he wrote the general theory as a playbook for politicians to do whatever they wanted in terms of spending, but he just didn't seem to understand wage and prices and their relation. He didn't seem to understand supply demand. Anyone who's saving, anyone who was a saver, who didn't want to consume and spend all their money or take on a lot of debt, he basically seemed to be evil, and he seemed to be quoting a lot of Marx in his original book.
Well, don't misunderstand me. I have nothing at all against John Maynard Keynes. I think he was a great economist, but I think his theories have been hijacked. And the hijacking occurred that basically there is continuous interventions, and his original thought was, in boom times, you slow down the economy, which is a good idea. And then in depressions, you supply some economic activity through government interventions, which is also not necessarily a bad idea, as long as during the good times it's taken away. But the politicians and the Neo-Keynesians, they hijacked all this, and each time there is government intervention, it's never taken away again, but actually increased. And the whole problem, in my opinion, of today's economy is that the government is not the solution to slow growth, neither with fiscal nor with monetary measures. The problem is the government itself. And unless people one day wake up to the fact that because we have too much government, the economy cannot grow anymore as fast as it grew when government was just 20% of the economy, as long as they don't realize that, the economy will not perform well.
It's a great point, Mark. And the dirty little secret that most Americans and even most mainstream financial people don't understand is how much government spending is of the economy. So when you add up all the different levels of government here in the United States, you add up the federal government, you add up the states and the municipalities, you add up the transfer payments that are going out to people, who can't either don't want to work or can't find a job, and they're still consuming an enormous amount of money, over $40,000 a year in consumption bills. And you add all of this up, and this is over 40% of the United States economy through consumption, basically. So it's just an enormous...
Everything together, it's probably more like 45%. But in Europe, it's even worse. It's in some cases almost 60%.
Yeah. It's definitely...
But you understand that it's been a very questionable game that was played. The government expands, and as they expand, they have their mouthpieces that tell people, well, if we don't do this and if we don't do that, it would be even worse. That is the problem.
Yeah, it becomes just a self-fulfilling prophecy.
And in a democracy, people will always vote for their own benefits. So if you bribe people and tell them, well, we give you food stamps and we'll give you disability insurance and this and that, of course these people will vote for you. They are not going to vote for austerity. I think the whole system will eventually collapse.
Yeah, I mean, it's a question of when and not if. And I mean, if so many other governments are doing this, I mean, how are they going to be able to not all have inflation? I guess, like, from my research at least, it seems basically every single government on the planet, China, Japan, Europe, the United States, they're all basically lying about inflation. When I talk with my contacts, it seems their food bills going up, their energy bills going up, their insurance costs are going up, their utility bills are going up, their rent is going up. So, I mean, there's consequences to just printing the money and giving it out for people to spend. And it seems, the money is not being allocated properly, like you said. It's not going into the hands of the entrepreneurs and the small businessmen. I mean, here in the U.S., you have entrepreneurs, you have the people in the shale oil revolution in Silicon Valley, and besides the Fed printing money, that seems to be the only thing that has prevented the United States economy from collapsing is the fact that we still have some entrepreneurship here that's creating some value and reducing our trade deficit.
Yeah, sure. There is in every country entrepreneurship. Even in India, where it's now improving, but where in the last, say, 20, 30 years, the bureaucracy was horrendous. Some private businesses were doing very well. That always happens. It's like in an economy that is essentially a central planning economy under communism, socialism. There is a thriving black market. You understand? A very limited sector gets away with it. But the broad economy is being hampered, stifled by government regulation and laws.
Yeah, I completely agree, and it just seems to be playing out, Mark, like the book Atlas Shrugged. And yes, it's not happening overnight, but it just seems like the entrepreneurs here in the United States, unless you're a technology entrepreneur and you can put a website up and start making money that way, seems all the other businesses and all the other industries, there's all these extra hurdles, rules, regulations, permits. I mean, even to put a food truck up now, Mark, if you're a creator.
I had the visit of several people. And then I asked them, these are young people, and I'm always happy to meet young people who are entrepreneurs. And so I said, what do you do? They all said they're doing some kind of mobile phone application. Among all these internet startups and application companies and, there'll be one Google and one Facebook and thousands and thousands of failures. Thousands.
Yeah, well, that's how free market works, though, Mark, is that, even despite the fact that there's so many failures, is that the consumer benefits, right? Because the one winner who does win, it benefits so much of society in sort of a democratic way, and that's what creates a higher quality goods and services at lower prices for all the consumers in a beneficial way.
Yeah,
and
sure,
in the
but I agree. But, I think Google is a wonderful company and so forth and so on. But the fact is simply, it doesn't generate jobs for the entire economy.
Yeah, and if there were lower taxes, I think part of the problem is the fact that the United States has such high corporate taxes. In addition to these rules, regulations, red tapes, and permits, if all these things were lowered, there would be the proper incentive in place for people then to figure out how to allocate capital and then create their own jobs.
Sure, correct.
Now, my next question, Mark, since you travel all over the globe, I was wondering what the foreigner's perception is of the American government in terms of the wars, the amount of money being printed. Are foreigners really starting to hate the United States government and Americans at this point?
Well, to tell you the truth, foreigners think that Mr. Obama should play even more golf. Because as long as he's on the golf course, he doesn't cause any harm. But you understand, in general, I think that people have not a very good opinion of Mr. Obama, nor a very bad opinion of Mr. Obama. But they regard his foreign policy to be measured. And then people think, what if Mr. McCain was in power? Where would we be today? In World War III already? So I think that in general, the world has, of course, not the same opinion of the United States as they had in the 50s and 60s, when the U.S. enjoyed very high prestige. That is gone. And most foreigners, wherever you go in the world, they believe that the U.S. has double standards. In some cases, they say we need democracy, but at the same time, they support evil people. And then suddenly they decide to take out some not terribly evil people, but say some questionable people, such as they tried with Assad, and they did with Gaddafi. But they do not then see to it that something better comes along. Libya under Gaddafi was in a far better condition than it is today. And what did they do? They supported rebels in Syria. That became ISIS. They even trained them in Jordan. You have to listen to this. They trained them in Jordan. And now, of course, the monster has become a huge Dracula and threatens the whole Middle East.
Yeah, I mean, U.S. foreign policy for many decades has been very questionable. I mean, look,
That's been a catastrophe.
yeah, I mean, especially in the Middle East, I mean, all for oil, right? I mean, look, Saddam Hussein, U.S. trained him and then lost control of him, and then they took him out, and then U.S. trained Osama bin Laden, and then, lost control of him, and then, he did the stuff with the 9/11 and the other stuff,
Yes,
the other terrorist.
but
Yeah,
it's not
so
going
it's
to
just,
improve. There is a chance that Mrs. Clinton will become the next president. And as someone recently wrote, a lengthy article, when has Hillary Clinton ever been right in her foreign policy?
yeah, I don't think she's honest either. I mean, from what I heard, I actually listened to an author who researched her Secret Service agents, and she pretends to be a president of the people, but she's really a spoiled elitist, and she treats all her underlings very, very badly. She treats them like she's way above them and stuff like that. So it's just public persona. She goes out in public and she says one thing, and then in private she does something completely different,
Sure.
which is complete double
She's
talk,
a typical
normal
queen bee.
yeah, exactly. Now, Mark, in terms of economic growth in Asia, do you think China has drastically slowed down, and do you think there's still a long-term secular bull market in commodities, or do you think that's changed now?
I believe China has already slowed down very meaningfully, meaning that the growth rate would have fallen off from, say, 8 to 10%, 8 to 12% per annum, as it was in the last couple of years, to say around 4 or 5%. And I think they have a credit bubble that either will be deflated now or they have to print money. Either outcome will be undesirable. But having said that, equally, a lot of stocks in China have already discounted a poor economy. If you look at the performance of Chinese stocks, the S&P 500, it's been a catastrophe. Chinese stocks are still more than 50% down below the level of 2007, early 2008. So I think that some money will flow into Chinese stocks for the simple reason this year, after several years of strong performance, this year Thailand, India, Vietnam, Indonesia, the Philippines were all up between 20 and 25%. China is the only market, along with Hong Kong, that has performed poorly. So I believe what will happen is some of the portfolio managers and some of the international asset allocators will take some money off the table from the markets I just mentioned and invest in Chinese stocks.
Yeah, I'm not a big expert on Chinese stocks, but what I've heard is that there's accounting issues. But from speaking with Jim Rogers, I'm friends with Jim Rogers, and I've interviewed him in the past, he seems to think that the best way, rather than necessarily buying Chinese stocks right now, to invest in China is to continue to invest in commodities. But in my view, in terms of the long-term commodities bull market, I'm very wary to invest in base metals at this point, and perhaps also coal, though maybe coal's a trade if coal drops below the production cost, because it seems to me that politicians don't want to endorse that many more coal projects. They're all believing in climate change and the problems with coal, and they're all trying to get rid of coal plants for the most part. So it seems to me that food, agricultural commodities are good investments in the long term, because China's middle class on a per capita basis is increasing. The energy, so natural gas and oil and maybe nuclear and uranium, and then of course precious metals with your business partner now, Eric Sprott. And platinum and palladium, because China is now switching to regulations for cars for catalytic converters. Those seem to still be good investments and in a long-term commodities bull market.
Yes, basically I agree. And we have a lot of volatility in commodities. I mean, coffee is up more than 80% this year alone, after having been down last year very substantially. I tend to agree with the theory, but I would not necessarily buy commodities because of the increase in demand. I would buy some commodities because of supply constraints, because of huge cost increases, and some because they are now relatively inexpensive compared to, say, the S&P 500. If I look, say, at precious metals compared to the S&P 500, and if I look at all the central banks that have nothing better to do than to print more money, then I think that precious metals are reasonably priced. But does it mean that they'll go up right away? No. They can still go down, and possibly, as some informed people believe, they have been manipulated down. So, but I personally, I own gold. I will never sell my gold, and I'm still buying gold on weakness. I buy every month some, but whenever the price is weak, I buy some higher level of positions because I have an asset allocation that includes equities, bonds, gold, and also cash and bonds, and real estate. So within that allocation, as stocks have gone up so much, the allocation to precious metals has declined, so I have to increase it occasionally.
Yeah, that's a good point there, to keep dollar cost averaging on metals and, try to take emotion out of it and not try to perfectly time the market, because there is manipulation in the market. And then also you talked about diversification here. I mean, not betting on one asset class, because the politicians, one thing they're good at, Mark, they're all lawyers. They will change the rules. They already have changed the rules a lot. In the U.S. we have FACTA and all these other rules and regulations that have gone into place. I think they're going to keep changing the rules on asset classes and taxes and things like that, unfortunately, and it is what it is going forward there. So I think my listeners out there, they shouldn't go all in on any one asset class, no matter how good they think it is. Now, in terms
I think your listeners should consider, and that is has become in reality much more difficult, and this is to own assets outside the U.S., because a U.S. citizen will find it extremely, and I repeat, extremely difficult to open an account with a foreign bank. But he can buy real estate overseas. That is a possibility.
Yeah, for now, real estate is fairly simple to buy outside the United States, but who knows what the law changes are going to be going forward, after FACTA.
Sure.
Has gone into place.
And all these regulations are a de facto foreign exchange control.
Yeah, and unfortunately, Mark, I think it's only going to get worse as the U.S., starts trade wars with Russia and other sanctions and other things. I only see things, unfortunately, getting worse. It seems to be, a reenactment. We're not quite there to the levels, of Smoot-Hawley before World War II, but it seems we're kind of going along that path. We have currency wars now. We've started trade wars, and we may have resource wars where people say that they're not going to get oil imports or stuff like that. Similar to how the U.S. told Japan prior to World War II, you can't have oil or rubber. Well,
right.
In wrapping up this interview, Mark, I just want to thank you for your time, and please tell listeners more about the Gloom Boom Doom Report.
Well, basically, I have two reports. One is a printed edition that is sent out by mail to clients, and it deals with investment strategies and ideas, where to invest in the world and in what to invest in the world or in what not to invest. And I have a website report that is sent out by internet, in other words, email every month. That is kind of a more timely report, and it's more simple to read than the other report. So this is what I do basically.
Yeah, and you also manage money. And
Yes,
do you
I
think?
manage money.
Yes. Well, I just want to thank you again for your time, and I'm going to go visit Eric Sprott in a month, and you know, maybe I'll see you there if you're up in Toronto. But hopefully, you know, we can have you back on again soon and talk about commodities and gold stocks and what
Sure.
you think's going on in the market.
Thanks a lot for having me on your program.
If you're tired of losing money with your financial advisor, want to ask better questions to your money manager, or would like to learn to invest on your own, Wall Street for Main Street can help you. Our goal is teaching people how to fish for themselves instead of trusting their financial advisor for everything. Wall Street for Main Street offers high-quality investor education, market research, and consulting for beginners, high-net-worth clients, and anyone else in between that wants to learn to adapt to the current macroeconomic situation, profit off of it, or hedge themselves. Please contact us at wallstreetformainstreet.com. That's WALLSTFORMAINST.com for more information. Also, if you love our podcast and website and would like to donate money so you can continue to get exclusive podcasts from top experts, CEOs, economists, authors, and all of our great guests, please go to our website to donate money, go to our Indiegogo page, or go to our iTunes page and give us a great review. We accept donations in fiat currency, Bitcoin, and also precious metals.